Welcome to this week's edition where we break down the key developments that moved the Indian stock market from September 9th to 13th, 2025. I am your host Prem, and let's get going. The week's biggest corporate story came from Infosys, which approved its largest ever share buyback program worth 18,000 crore rupees. The IT giant set a buyback price of 1,800 rupees per share, representing a significant 19% premium over the market price. This massive repurchase will cover approximately 2.41% of the company's outstanding equity shares, directly benefiting around 26 lakh shareholders across the country. Global sentiment received a major boost as expectations for a U.S. Federal Reserve rate cut on September 17 gained momentum. Softer U.S. jobs data, including a spike in weekly jobless claims to a four-year high of 263,000, reinforced these expectations. This development proved particularly beneficial for Indian markets, as lower U.S. rates typically improve liquidity flows into emerging markets like India. Commerce Minister Piyush Goyal provided encouraging updates on bilateral trade talks with the United States. The minister confirmed that the first tranche of the much-anticipated India-US trade agreement is expected to be finalized by November 2025, with discussions progressing positively since March. This news lifted investor sentiment, particularly given the potential for resolving ongoing trade barriers between the two nations. Defense stocks experienced a spectacular surge during the week, with the Nifty India Defense Index rocketing over 4%. Leading the charge were companies like MTAR Technologies, which jumped over 9% after winning orders worth 386 crore rupees from Bloom Energy Corporation. Garden Reach Shipbuilders, BEML, Bharat Dynamics and Paras Defense all posted gains between 5 to 7%, driven by fresh order wins and heavy trading volumes. The week witnessed contrasting institutional flows, with foreign institutional investors showing net selling pressure of 9,244 crore rupees for September so far. However, this was more than offset by robust domestic institutional investor buying of 27,147 crore rupees during the same period. This pattern suggests strong domestic confidence despite foreign investor caution, providing crucial market support. Perhaps the most dramatic story this week unfolded in the precious metal space, where both gold and silver reached unprecedented heights. Gold prices in India surged to 113,800 rupees per 10 grams on Friday, marking a remarkable gain of 700 rupees in a single session. The yellow metal has now delivered a staggering 44.14% return in 2025, rising from 78,950 rupees per 10 grams at the end of December 2024. Silver's performance proved even more spectacular, crossing the psychological barrier of 132,000 rupees per kilogram. The white metal surged 4,000 rupees in Friday's session alone, extending its phenomenal year-to-date gain to 47.16%. On the international front, spot silver climbed to $42.30 per ounce, hitting a 14-year high and reflecting a 46% surge year-to-date. The benchmark indices posted their strongest weekly performance in nearly 3 months. The Nifty 50 advanced 1.5% for the week, closing at 25,114 on Friday, marking its 8th consecutive session of gains. Meanwhile, the Sensex rose 1.47%, finishing at 81,904.70. This sustained rally pushed both indices to fresh multi-week highs, with the Nifty crossing the psychologically important 25,100 mark. The market witnessed significant sectoral rotation during the week. Auto, pharma, metals, and telecom sectors emerged as clear winners, each adding between 0.5% to 1%. The banking sector showed mixed performance, with private sector banks outperforming their PSU counterparts. Conversely, FMCG, media, and real estate sectors faced selling pressure and ended lower. The IT sector benefited significantly from the Infosys buyback announcement, with the sector index gaining 2.8% during the week. Mid-cap and small-cap indices demonstrated strong momentum, with the Nifty Mid-Cap 100 rising 0.3% and Small-Cap 100 advancing 0.6% on Friday alone. For the week, mid-caps outperformed, with a 2% gain. This broad-based participation suggests healthy underlying market sentiment and increased risk appetite among investors. The Indian rupee provided additional market support, ending 17 paise stronger at 88.27 per dollar on Friday. This currency strength, aided by Reserve Bank of India interventions and robust foreign exchange reserves, created a favorable environment for equity investments. The stable rupee helped mitigate concerns about capital outflows despite FII selling pressure. The primary catalyst behind the precious metals surge was mounting expectations of U.S. Federal Reserve rate cuts. Markets now fully price in a 25 basis point reduction at the September 17 meeting, with weaker U.S. employment data and rising jobless claims reinforcing dovish expectations. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold and silver, making them more attractive to investors. Silver's exceptional performance was driven by a unique combination of monetary and industrial factors. Industrial demand for silver hit 680.5 million ounces in 2024, marking the fourth consecutive record year. The solar energy sector alone is projected to consume 200 million ounces annually by 2028, up from 140 million in 2024. Electric vehicle manufacturing emerged as another major demand driver, with each EV containing 25 to 50 grams of silver, 2 to 3 times more than conventional vehicles. With over 17 million EVs projected to be sold globally in 2025, this translates to massive silver consumption. The metal's irreplaceable role in photovoltaic cells, where it forms the conductive grid that captures solar energy, positions it at the heart of the renewable energy revolution. Central banks worldwide have provided crucial structural support to gold prices through sustained purchasing programs. Despite some recent moderation due to high prices, central banks have bought over 1,000 tons of gold annually for 3 consecutive years. This de-dollarization trend reflects central banks' desire to diversify away from U.S. assets amid geopolitical tensions and concerns about dollar stability. India has also begun repatriating gold stored abroad, with 58% of reserves now held domestically compared to just 38% 2 years ago. The convergence of these developments creates a constructive outlook for Indian equities in the near term. Infosys' record buyback signals strong cash generation capabilities within the IT sector and may encourage similar moves from other technology companies. The anticipation of US Fed rate cuts could trigger renewed foreign investment interest, particularly if global liquidity conditions improve. The progress in India-US trade negotiations represents a significant long-term positive, potentially unlocking billions in bilateral trade and investment opportunities. For the defense sector, the sustained rally reflects the structural growth story backed by government indigenization initiatives and a robust order pipeline extending beyond 2025. This week's developments underscore the Indian market's resilience and the growing confidence of domestic investors. While global uncertainties persist, the combination of strong domestic flows, corporate actions like major buybacks, and diplomatic progress on trade fronts has created a supportive environment for continued market strength. As we move forward, the key will be maintaining this momentum while navigating the evolving global monetary policy landscape and ensuring that market valuations remain anchored to underlying economic fundamentals. I hope you found this useful. Do post your queries and have a great weekend.